Good evening, I'm Brigid and this is Currency Wars. This week we saw both the local equities and the rand trade weaker as the foreigners were aggressive net sellers of stocks. They did, however, show interest in buying bonds at the cheaper levels as global rates remain unchanged. Meanwhile, in the Eurozone, the business activity expanded at a slightly weaker pace than expected in September. The Eurozone data saw poor PMIs followed by a disappointing German IFO index yesterday, signalling deterioration in their growth outlook as we approach the end of the third quarter. The German economy was typically one of the primary growth engines of the fragile Eurozone region, and a view of tighter business climate conditions will no doubt add to worries that the ECB needs to do more. The trend remains lower on the euro-dollar and suggestive of a more favourable carry performance by emerging markets versus the euro, more so than against the dollar. Meanwhile, the sale of new US single-family homes surged in August to their highest level in more than 6 years, a sign that the housing recovery remains on course. Locally, however, the PPI data continues to raise concerns of the cost-push pressures in the South African economy and the profitability of the retailers and other suppliers as consumers remain under pressure. The SARB still appears reluctant to hike given the shallower growth and inflation forecasts and has expressed a stance that will remain very reactive to the rand and the inflation risks. There does appear to be a potential for another 25 basis point hike in the November MPC, given that the rand remains highly fragile. Right, now that we've seen the lay of the land, I'd like to welcome my guests for this evening, Sluis-Cremer from RMB and Andre Cilliers from TreasuryOne. Welcome. Right, so we've had the public holiday, a bit of a lack of braai. I know you didn't braai, but Andre and I certainly did.
Yes, we did.
And it feels like a Monday, but it's not. So let's talk about where we went to in the last week. We've had MPC, we've had the FOMC. Obviously, this week has seen the rand deteriorate quite significantly. Jan, what do you think about the current levels that we're trading at?
I actually don't think the current levels on the rand overall in the greatest scheme of things are that bad. I mean, dollar is king. With euro below 128, we'd like to have thought we'd see the rand a hell of a lot weaker than we've seen it. Lots of local sellers around, still guys coming in buying up the bonds, so search for yield is on. Euro rand is behaving itself. That's hovering around the 14.25 area. Sterling rand's at 14.30, so it's not really so much a weak rand story. I think it's more a strong dollar across the board story.
Okay, that's quite interesting to consider because we've lost 50 cents on the rand in the last week.
Yeah, we've lost 50 cents, but yesterday was actually also an interesting one to watch. I mean, when we left on Tuesday evening, it was around the 11.18 level. And yesterday morning it was around the 11.10 level. I spoke to a client of mine who didn't really know that it was a holiday for us. And he called me, and here's what I said. It was interesting to see that the rand had come down 8 cents yesterday. Tells me a little bit about what foreigners are doing. They're not really in this area of 11.18 and the dollar becoming stronger, and we'd better scramble to buy dollars against the rand. They've actually sold dollars. So I agree with Jan that if you look at the context today, 127.40 on the euro, the rand's actually holding up very, very well.
Well, it's quite interesting. I mean, if we look at what happened on the equity market, so we saw, previously Friday, Monday and Tuesday, we saw massive sell-offs. I mean, that wasn't just in South Africa, that was globally. However, in the South African market, I mean, net aggressive sellers in terms of the equity market. But as you mentioned earlier, we've seen that consistent buying of the bonds, which obviously speaks to the interest rate outlook in terms of both the US, the Eurozone, and then obviously where South Africa sits, despite our MPC keeping rates on hold. So, going forward, what do you think is going to be the impetus in terms of, the current levels that we're trading at? We can expect further weakness on the euro, and we can expect a little bit more strength in terms of the dollar. But do you think that it's overdone now, or do you think that we've still got some upside?
I think it's probably starting to look overdone. I do think there still is some upside. We're still looking forward to buy dollar rand on a dip. Still looking for a weaker dollar to test the 11.38 levels again that we saw back in February. Just to come back to what Andre said earlier on, yesterday being a holiday here, the rand strengthened 8 cents. Now, if I just go back years in past, and it always generally happens on public holidays in South Africa, the rand tends to strengthen because the doom and gloomers, as we sometimes like to see ourselves as, we aren't around to just only look at the negatives. There are some positives out there, like the guys buying our bonds to pick up the yield. So as soon as we're not around, Rand does seem to strengthen.
So then that's something to keep in mind. I mean, you're right. Obviously also the local importers are out the market, so that's something else to consider. So if we look at South Africa as a net position, in terms of the view that we see and the trajectory of the Rand, is it fair to say then that the majority of South Africans still expect to see the Rand slightly weaker just because we understand our fundamentals a lot more? However, we're being protected by that hunt for yield. So if we look at what's happened in the Eurozone, you know, with regards to extending further quantitative easing, they're obviously going to extend rate hikes in the US. That's been the talk from the FOMC or certainly Fed members. However, in South Africa, we haven't hiked the rates. We have got those underlying fundamentals. Do you think that the Rand's going to continue to be dragged along, as Andre's used in his previous descriptions, as the caravan in the car, with behind the global economy, or do you think our fundamentals locally are going to come back to bite us?
Look, I think overall you've got to look at our fundamentals. You know, if you just look at the headlines of the newspaper over the last couple of days, the Rand should be a lot weaker, but it hasn't been. I do think, you know, Rand will inherently always weaken over a period of time. We've got massive twin deficits. You know, those kind of things aren't going away today, and they're not going to go away tomorrow, and probably not the week after either. So, yes, while there is room for further weakness, I think overall in the next month or two, you probably could see some strength coming through. As we start heading into the Christmas season, end of the year, people want to go on holiday and, you know, forget about Rand for a while.
Yeah. So that's quite an interesting scenario. If we look at the cross rates as well, Andre, let's talk about, you know, for investors, and particularly those that are on the import-export side. We looked recently at the strength of the Rand on the back of the weakness of the euro, and that saw that cross rate trading below that 14 level, and it did quite well. I mean, I think that was a nice dip. Obviously, post all the announcements out of both the FOMC, the ECB, as well as our own MPC, we've seen a trajectory back up above that 14. I mean, we're closer to the 14 sort of 30 level at the moment. What is your view going forward in terms of that cross rate specifically?
Well, it's interesting that you asked that question, because I was just about to say that last week we've heard a comment from one of the Fed members that had referred specifically to the strong dollar and weak euro and other currencies, or the strong dollar then, that will impact negatively on the expected growth in the Americas. So I think we might just be sort of closer to the end of the strong dollar run and find that the euro sort of bottoms out at these levels, maybe a little bit lower further, but sort of bottoms out. That could pose a little bit of a threat, seeing a Rand going back sub 14 against the euro and actually remain at these levels. But I do think that the Rand overall, over the next 2-3 months, we'll see it coming back most probably below 11. There's a lot of people speaking about 1070, but over the next 2-3 months, I would rather sort of just slightly below the 11.
Okay, so you're saying we're troughing at these sort of levels. I mean, we've seen a nice dip. We saw the Rand within those ranges. We had that dip, and specifically on the back of the Euro Rand, we saw that sort of 1380 level. So you're saying around that 14, it still looks like an opportunity to buy, just because of the trajectory in terms of where the Rand's potentially going to go, and especially if the Euro does base.
Yes.
You know, obviously with regards to what the European Central Bank does, that's a big one. So let's talk about, because it seems to me that, you know, the general consensus in the conversation is, despite the fundamentals in South Africa, and we all know what those are, however, we are being dragged along, and a lot of that's got to do with the interest rate outlooks. So the United States are unlikely to hike, but then you are seeing the US Treasury's marketing around that. In terms of the cross rates against the pound, that's also been an interesting one, because we saw that rally hard last week.
Yeah, I mean, you know, I think we spoke about it last time, and it was looking good. We saw the uncertainty in sterling around the yes-no Scottish referendum. It came out like I kind of think probably majority of people would have expected it. We saw the pound initially. We saw when the polls changed from a no vote to a yes vote, sterling got sold off across the board against practically everything. We saw sterling Rand then trade as low as, I think it was 1770, might even have touched a little bit lower. Then we saw the vote come out last week, and sterling reversed its losses. So we're back up at the 1830, but I still don't think it's, you know, really that bad against the rand. And I think, agree with Andre, like euro rand is toppish at sort of around these levels, maybe a little bit more weakness. I think sterling rand will also start drifting back down towards the 18 level, and possibly even 790, because both of them on the cross point of view are looking toppish.
Okay, so basically all the bad news has been priced into both the sterling and the euro. If anything, we've probably got a little bit of upside. Right, now that we know where we stand and the real risks and opportunities, we're going to pull out big guns. We're going to look at some levels. I'm going to start with you, Jan. I'm going to put you on the spot first. Give me a couple of levels just to watch in terms of where you're likely to trade, and I want you to talk across all the cross rates, please. Okay, so let's start with dollar rand. Currently, we're trading around the 18.20 level. I think as long as we stay above, for now, 11.08, 11.10, I think there's room up to the top side, 28, even possibly 34 again, but that should really be very, very toppish. Moving on to euro rand, 38 has been toppish now. We tried it a few times last week. So 14.38 tops for me, hovering around kind of no man's land in the moment. I'm looking for another test of like 14.10. Pretty much the same with sterling rand. Here we are, 18.30 currently. Look for it back down to 18.10 again. Okay, those are great. Thank you. And your views? Anything different to that?
Not much difference, but I think that the 127.5 levels of the euro should be watched very closely. This drops below 127, then look for a rand back to the 11.25, even possibly 11.30. So over the 2-week period, I'd say call it between 11 and 11.20, 11.25-ish. Euro rand 14.15, 14.30 levels, and the pound between 18 and 18.25.
Fantastic. Thank you so much, guys. I really appreciate your views. And so just in conclusion for the week, the trading strategy really is that we may have seen the massive rally that we've been waiting for in terms of the rand weakening, but it's really been in accordance with what's been happening globally, specifically around the dollar strength. So if we're looking for ranges on the week, on your pound, look for around the 30 level, 18.30 as the top, with a potential for it to go back down to around the 18.05, 18.10 level. And then on your euro rand, looking for around 14.35 as the top. However, that also looks toppish around those levels, and looking for back down closer to 14.10, and the dollar rand to stay within the current ranges, potentially up to about 35. That's 11.35, and then back down to, if we're lucky, closer to sort of 11.15. So your views for the week: if you're exporters, take advantage of the tops. Importers, you can hold up a little bit and look for the dips. Until then, please send any of your questions or comments to @CNBC Africa #CurrencyWars410 or to myself at Brigid R. Taylor for your personal responses to the FX markets. Until next week, good luck in the trenches.